We got disclosure. We got to start this doohickey again. Is he going to talk? Replay.
Access to this webinar is for educational and information purposes. Registered investment advisor before placing any trades. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither PhilStockwell.com, PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OTC website www.optionsclearing.com to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any loss you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously and we will not distribute or sell your information to anyone.
All right, that's exciting. So we are limit down again, 7% on the Dow and the S&P. It's the S&P that they watch, and that's exactly 7% down at 2350. Total disaster. Again, Trump speaking again. Everybody loses confidence again. You know what it is? Because I think that people weren't selling because they thought he might announce something good at the time, and all he says is, "This is the most contagious thing ever. It's not my fault. Nobody told me." It's China. China did it. A reporter said to him, "It's like, don't, you're not supposed to say. You understand that you're not supposed to say it's a China virus. That's racist." And Trump's like, "It's not racist. It's a China virus." And they said, "China, China, China," like a freaking child. Oh my God, it's so funny. It would be funny except we're fucking living through it. That's the problem. I don't know what to do. I really don't. I mean, it's just gone crazy. Look at this. I mean, God, look at the Russell failing 1,000. So that's because he's organized properly. S&P, oil, $22. Oh, let's look at the report. Let's do that. So here's the Dow, YM. That's the S&P. We'll make you the NASDAQ, NQ, and you're RNQ, and you're going to be RTY, the Russell. Still looks bad. Wow. 7,000 on the NASDAQ, below 1,000 on the Russell, 19,300 on the Dow, 2350 not even holding on the S&P. It's just mind-blowing. Oh, that's the dollar. The dollar. See, here's the problem though. Look at the dollar. It's because the other currencies in the world are collapsing. People are running to dollars. People are transferring everything to cash, and that's spiking the dollar. And the dollar is up 2% this morning, today. The dollar is not supposed to go up 2% in a day. That's smashing the markets. Usually the markets will go double whatever the dollar does. So if the dollar's down up 2%, that's 4% kick in the pants for the market right there. Ugh, it's really horrible. Wow. I'm sorry if you came here for a rosy picture. I don't got it. I mean, there's just simply not enough buyers to take care of the people who want to get out. They aren't there. We're not really buying. We're buying some call options and stuff, but we're not running in and buying stocks because we don't have the faith in it. But if we look at the S&P 500, well, look at the SPY. That's easier to trade. It's easier to track the SPY because we can look at the volume. So this is a heavy volume day. We're already at 144 and we're only halfway through the day. Look, this has been normal for, well, I don't like to use the word normal, but see 45, 60, 60, 50, 40, 40, 30 even. These are millions of SPY shares traded, 50, 60, blah, 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 50, 60. Then all of a sudden in February, 74, 113, 160, 200, 194, 385, and things started just falling apart. 300, because there's just the same 60 and 40 are want to buy, except 240 want to sell. That's what your problem is. If everybody's selling and nobody's buying, then you run out of then the bid drops, right? Then that's what the bid ask spread is. Somebody is bidding. If nobody's bidding, if you exhaust all the buyers, you have to find buyers at lower levels. People who ordinarily wouldn't buy, but when you finally get to a price, they say, "Oh, okay." All right. So we get to this price, but when people have no confidence in the market, there's nobody willing to buy. And there are people, of course, obviously somebody's scooping up these shares, but there's people who say, "Okay, well, sure, if you want to give me IBM for 90 bucks, I'll take that. If you want to give me Disney for 80 bucks, I guess I'll take that." But that's their price. So things just drop and drop and drop. And then if more people want to get out of Disney and more people want to get out of IBM, they've got to find you. Once you exhaust that guy who said, "Okay, I'll buy," he doesn't care. He's buying $800 million worth of Disney for 85 bucks. So what? He'll buy 1 million shares. But if you're trying to sell 10 million shares of Disney, you got to find the next guy after him who didn't even want to buy it at 85. And that becomes a new price. And until you run out of sellers, that's going to keep happening. And unfortunately, we have had 10 years of extremely low volume rally. So it doesn't take much of a rally of a selling thing like this to throw the whole thing off kilter. And that's why they're talking about possibly closing the market, because you've got to find an equilibrium, and you're not going to find equilibrium as long as we aren't containing this virus. Everybody's just liquidating. And I'm sorry, because we're getting killed too. Everything is, there's a limit to how much you can hedge. So, the good news is the short-term portfolio is up 159%. And we have hedges that will pay us a tremendous amount of money if things keep going. But the bad news is, where's my Tesla? Oh, that's right. I only have we only have the puts left now in Tesla. The bad news is, though, that this isn't enough. 259,000 isn't enough. And even if we make another 200,000, which we will make if it keeps going down like this, or as I said today, because when you look at what you're getting paid here, we've got 100 of the June 25-35 bull call spreads, and we're at 28. So that's worth $30,000. Yet the net of this is only $20,000. So, it takes, there's a lot of premium baked into this that we're being penalized for. The short 27, well, the short 27 calls are at the money. They're showing minus 40,000, but they're nowhere near that, obviously. These QQQs, I don't know what they are. It's a $20 spread. It's whatever 7 times 8 is. I don't know, 50, 40, I don't know. 8 times 8 is 64, 740, 56. So $56,000, and it's showing about the right price, actually. It's actually, that one's in our favor, so I shouldn't complain. But anyway, you just get all these crazy prices and you can't tell anything. But the bottom line is, look, that's $160,000 spread, and the current net of the spread is 60. So this will make $100,000 if the S&P if the NASDAQ keeps going down. This spread, well, these spreads are smaller, so they don't matter much. This one's another $100,000 spread, and it's net $20,000 at the moment. So that'll make $80,000 if it keeps going down. This SQQ spread is a $15 spread times 65, about another 100,000 basically. And that one is net nothing. Look at that. That's $100,000 spread that's currently net. What is it? That's 10, not even 11, 12,000 bucks. So, I mean, obviously you can't really get them for these prices, but that's because the portfolio is going to show you the worst. They're going to show you In other words, when they give me a price for the June 20 calls, they're showing me the bid for the June 20 call is 1590. But when they show me the short 65s, they show me the ask. So you get the worst possible buying price and the worst possible selling price and the worst possible buying price on each end. That's what your broker shows you. And that's unfortunately how they also calculate your margin. It makes it very difficult. But so you have some element of panic to what's going on here, but also mechanically, you just have simply too many people selling for their buyers. There's not enough people buying for the amount of people selling. And if the people selling are panicking, then they're selling at any price, and therefore, boom. And by the way, this is what I was talking about the ETFs a couple of weeks ago, when I said your biggest problem right now is that ETFs are 25% of the market and make up a huge amount of the trading. And an ETF, when somebody sells SPY, they're selling every single stock in the S&P 500 at the bid. You know, these ETFs don't negotiate. They just sell at market every single time. So if people are buying, if there's net buying, the ETF adjusts by buying at the market. And if everybody's selling, the ETF adjusts by selling the market. That's why, you know, they're holdings, and that's why ETFs suck. I mean, it's ridiculous. You wouldn't buy like that. And plus, the other thing I hate about ETFs is you're buying the good stocks. You're buying all the bad stocks with the good stocks. Like, why can't you just pick the good stocks and put them in your portfolio? Now, not that that really helps, because we're certainly trying to do that and we're getting killed. But meanwhile, in the LTP, we've got $457,000 in cash, but the contracts we have are worth $198. But like I said, that's extremely suspect. And our liquidation is $259. Now, the long-term portfolio is being completely destroyed because of the incredibly high VIX. And that's down 95%. You know, and of course, a lot of it is ridiculous, but some of it isn't, because we are getting killed on certain positions, especially Disney. Where is Disney? No. Oh, no, it's not Disney. Wait, don't we have Disney? No, I guess it must be in the butterfly portfolio. Look at IMAX. We sold IMAX puts at $20. IMAX is now $6. So we're taking a massive hit on this IMAX position. That's a huge chunk. And why do we own calls? Oh, I guess we okay. I guess we had a bull call spread and we took it apart. So look, I mean, this is just completely crushed. You know, we'll roll it and we'll stick with it, and hopefully one day we'll make it back. But for the short run, no, we're getting killed. You know, so there's things like that. These short puts are just destroying us on some of these positions. Here's a huge loss on Planes, which was a stock that we own. That stock took a $40,000 hit in that case. Any other biggies? No, those are really the biggies. Oh, Middleby, look at that. I mean, $49,000 on the puts there, because it went to freaking 50. How does this even happen? I mean, this is so irrational. What, all of a sudden nobody's ever going to buy an oven again? I mean, cooking is one of the only things people are still doing. Restaurants are still cooking. They're still making food. They're just delivering it instead of people coming over. But there'll be a certain net loss. But because it's a restaurant-oriented stock, goodbye. Nobody wants it. 20% off today. So what are you going to do? I mean, all you can do is ride it out, and that's the point of the short-term portfolio, is it provides cash that we can then distribute to the long-term portfolio to adjust the positions. But this is historically bad. It's worse than 2008, because in 2008 it didn't go down this quickly. We were able to adjust more often. You know, we can't afford to keep adjusting. I can't take the cash out of the short-term portfolio right now. We need to let the positions mature. So we got to just, be careful of the VIX. From an allocation standpoint, of course, we should be rolling, and I got to decide what I want to do. You guys can chime in on that. I mean, realistically, you'd want to allocate more cash to these portfolios. But the question is that something people want to do? or should we just wait and ride it out? Because the logical thing to do right now is to allocate more capital to these portfolios and to these positions. And we did just sell some more puts yesterday, not that that's going to help us today. But it's the reflexive stuff, what I call reflexive, and that means that you take these calls for Broadcom and you roll them down, and you take the Cisco calls and you roll them down, and you take you take the calls and companies that you think are going to survive, and you roll them down, and then you wait. But we already did that once. We already did we did that a few weeks ago. We already rolled them down. This is much worse, and it could get much worse again, which is why you have to consider in the short-term portfolio and say, well, at least we have that cash. We'll end up with $500,000 or $600,000 in the short-term portfolio. And that's what happened last time. In 2008, we had the same thing. And we had the same problem, basically. And I said to people, I said, look, at least you start with that cash. That we know we have. Why? You don't want to mess around with it when the market's collapsing, because that's your cash. When the world ends and the dust clears and everything is rubble around you, at least your short-term portfolio has some cash. And the funny thing was, in 2008, though, we were concerned that the brokers wouldn't be there, that at that time the whole financial system looked like it was going to collapse, which so far we aren't there yet. But how could we be? This has only been a couple of weeks. But you can't sustain losses like this. You can't have companies get their values cut in half without the banks tanking. Of course they're going to be tanking. This is a catastrophe. And something has to be done. I mean, the government has to do something and not freaking get up there and say it's China's fault. How can anyone know China did this? I mean, that's not what you really need your president to be doing right now. And obviously it's not all Trump's fault either, but it's the reaction to it and the lack of preparedness and such. That's Trump's fault for sure. Oh, what am I doing? All right, anyway. So that's why this morning I wrote hedging for disaster, because when you get to an inflection point and it doesn't look like you're going to hold it, which was 2,400 on the S&P, you got to start adding more hedges. So we added the SDS hedges. These are going to pay if we added oh, I see what we did. Okay, so we did 80 of these, and they were $3 each. So basically, we spent $24,000 in the short-term portfolio, and it's whatever 80 times it's an $80,000. I'm sorry, it's not. It's a $15 spread, so it's $120,000 spread. So we spent $24,000 on a $120,000 spread. So we'll make $96,000 on this play that we made today if SDS gets to 50. And today, SDS is up $5 in one day. So, we're only in the 35s. We did this because it was cheap, and we really didn't think this was going to happen today. I thought that this, I thought it would stop here. It's not stopping. It's down, well, we're down 7.6% right now on the S&P. So not good. I got to tell you, not good at all. Well, look, IMAX. Look at IMAX held $6. That's so exciting. Oh yeah, I was going to look at oil. Okay, so here's the thing with oil. We haven't looked at this in a while. February 21st. Here's the thing with oil. How much of a build are we going to have if oil prices are this low and demand is shutting down all over the world? Are we not shipping our 3 million barrels a day out? Can you imagine what kind of build we'll have in this country if we can't ship out 3 million barrels a day? I keep saying that 15% of the oil in this country, and I may have underestimated how bad oil can be, but 15% of the oil in this country, 20 million barrels a month, a week. I'm sorry, 20 million barrels a week. Look at that, 3 million a day, 3 million a day, 3 million a day, 20 million barrels a week. 15% of our apparent consumption is based on the fact that we ship it out of the country. Those are our net exports. And in fact, this week, yeah, so, we import oil, but we're exporting petroleum products. So we're not consuming this much. We're exporting 20 million barrels worth of it. 3.7 million barrels. So let's refresh and see what we are now, see what kind of terrible oil report we had today. This is from March 13th. That's the correct one, right? Because it's like the 18th now. Okay. Oil refining, blah, 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 blah. Petroleum reserve increased by 2 million barrels. Motor gasoline decreased by 6.2 million barrels. That's interesting. And distillate fuel decreased. This is a great report. This is not what I thought was going to happen. So, okay. So commercial oil increased by 2 million, but gasoline decreased 6.2, and inventories decreased. So, and distillates decreased. We're still exporting, but a little bit less. See 3.4 coming out. But look at that product supply, 21 million. That's interesting. And Trump didn't start putting oil in the SPR yet, even though he said he was going to. So we have an increase in oil, a 7 million decrease in gasoline, a 3 million decrease in distillate. Other oils is flat. I don't get it. This is a good report. This should not be happening. 17. This is today, 17%. There's no law anymore. There's no rules. There's no logic. There's no nothing here. This is a catastrophic sell-off. I mean, the only thing we can do is just ride it out. So, awful. So Randy says, I have a feeling in for a 50% retracement to 1700. Yeah, it's looking that way. 1600 is really the next target now. If 2400 doesn't fall, we haven't really got much support all the way down to 1600 on the S&P. 2000 will be some support, but really you can get down to 1600, which is insane. But it was just as insane though when we went to 660, it was 660 or something like that back in 2008. It was the same thing. It had gotten silly, but that didn't stop it from happening. So I wish I had an easy answer. I mean, all we can do is layer on the hedges, and that's what we're doing. And I wish it was a easier thing to do, but the problem is, like today, we made adjustments, which is very important, by the way. So in the short-term portfolio, as I said, we added the SDS hedge, and that's why I called the article, which I've done before in the past. It's called Hedging for Disaster, because this is what we do when we have a crisis. We make disaster hedges. The disaster hedges are cheap hedges that pay an incredible amount of money if things get worse. So this was a $3 hedge that will pay $15 back if things get worse. Okay, but that means you have to take money out. So that's why in the long-term portfolio, we say, okay, well, we'll sell these puts. If worse comes to worse, we'll take a loss on the puts before they get too terrible. But we're selling the puts. And then if we do drop 20% in the market, this SDS is going to pay us back $120,000. And then we take that money and we buy back the short puts, and we still have some cash left over to spend on actually buying some stocks that we like. But this is crazy. I said FXP was our first virus hedge. So we go, what's this? Virus. Oh, that seems so cute now, doesn't it? Look at that. February 28th, I said the markets hope that stimulus will save us, but in this case it can't. Our January 23rd virus hedges are already up. Oh, that's when we started hedging, was January 23rd. I was reviewing it here. We have a new hedge, and then we have a new hedge. So I put up a new hedge for China for hedging also, in case China gets worse. Oh, we were so optimistic back then, weren't we? So we'll see if we will. And what are we worried about? We're always worried more Fed bailouts. But you know what? More Fed bailouts are not helping, are they? It's not helping anymore. We're in a whole new ball game now. We're gonna have to really think hard about what we're gonna do about this. So I see. Wow. January 23rd, how we are hedging China's coronavirus crisis. Okay, and we were completely oblivious in the U.S. Our markets were not down. I said over 1,000 people are now infected, and as people begin to travel for the Chinese New Year, we're looking at the Chinese markets, and I said I have a nice hedge to protect your portfolio. Wow, look at that. See, I was worried about it back then. I would see it. This is why we've been on top of this, because I've been tracking this thing, and it just hit me really hard on the radar, and I just was looking at it and saying, this is a big problem. I wish I'd taken, and I'm sorry, because I wish I had taken it more of a problem. It could have been a huge profit, but the problem was we thought the Fed was going to come out and do all sorts of stimulus and stuff, and they did. But we didn't think it was going to be, I thought it would be effective. I didn't think it would be this ineffective. I mean, this is completely up. There we go, 8.5% down now. Dow's down almost 10%. So I talked about that, SARS outbreak, and I said here we can hedge China's crisis. And I compared it to what happened with SARS and so on and so forth. So I said we compare it with SARS, and we do the FXPs. And at the time, I guess we were here at 53 bucks. So we did the 50 call, same kind of disaster hedge though. It's the same logic, right? We did the 50-65 spread at 350. No, not 350, 450. At 450. We sold some offsetting puts, and we sold some offsetting CHL calls. Those are going to get hit because CHL is like 35 now, so these are like 10, but that's only a $3,000 loss compared to the gains. And it's a 30,000, so it's net 48.50 or 78.50 with a $3,000 loss on a $30,000 spread. So that was the first one we did in FXP, and then we added. That was our first hedge. And then I'm talking about that, blah, blah, blah. And then I say, yeah, I said, I still like CHL. Silly me, right? So I said, I still like CHL. But anyway, so then we did another one, boom. So then this one is another $30,000 spread, which is 5,500 and it's 15,000 the money to start, blah, blah, blah. And I said that we also had we have the SQQs. We were shorting Tesla. That was a good call. We shorted Chipotle, and we were long on Barrick Gold. Barrick Gold has really fell apart though, but at the time, well, and obviously Tesla is Tesla, and I don't know where Chipotle is, but Tesla's a disaster. And that's what we're doing. And unfortunately, we didn't go gung-ho bearish because I just thought the Fed was going to do whatever it took to keep the markets going. And the Fed is doing whatever it takes, and it's not enough because this situation is different. The Fed can't fix the virus. The Fed can't make you leave your house and go shopping. The Fed can't restart commerce. We have a big problem. And we are obviously not coming up with solutions. The president has no solution. He just got on TV. I don't know why they call a press conference when you're not going to be able to do it, when you have nothing positive to report. He thinks he can talk his way out of this. You can't talk your way out of this. This is a national disaster, and it requires some clear leadership. Oh my God, Boeing is 90 bucks. It's down 30. Wait, that cannot be down 30. That can't be down 30% today. Can it? Holy shit. Wow. It's 90 now. This chart's not even keeping up. Holy crap. The Dow is now down 2,000. S&P 2300 is being hit. Wow. Wow. I don't even know what to tell you guys. I honestly don't. Of course, look, this is what happened in 2009. In March, everything collapsed after TARP, after the Fed, after a lot of stuff. The market just had a massive sell-off and everyone collapsed. And at the time, I happened to be on TV and I was saying, buy this, buy that, buy this, buy that. But those prices were different than these. We were just buying calls. Things were so cheap, we were just buying calls, like flat out call buying. Because it was an absolute catastrophe. And one of the ones that we made a lot of money on was SKT. And I don't want to say any, I don't want to say, okay, SKT is the financial long ETF. I think it's an ultra. I forgot, we've never touched it since, but it was such a gift. No, not SKT, that's Tanger Family Allen. Damn it. That's not what I was thinking of. It was some kind of financial thing. It wasn't FAS, it was something else. FAS is the ultra short on the financials, and we shorted FAS, I know that. I can't think now, I've got SKT stuck in my head. It was some kind of ultra short. Oh well, anyway. But anyway, it was just, at the time that was the same thing. I mean, things were just crazy. Like Ford was like a couple of dollars. GM was like a couple of dollars. Bank of America was $5, I remember, because that was our stock of the year pick. I was just saying, I'm like, they're not going to let Bank of America go bankrupt. That would sound terrible. It would be just a horrible idea. But that's the problem though, because at the time, even though it was Bush, you still felt like we had a rational government. And you could say to yourself, well, come on. I mean, they're not going to let the auto industry completely explode, right? They pretty much did, but it just, you could assume certain rational actions would be taken. We don't have that. And meanwhile, today, still Congress is still dicking around with whatever. I mean, that's what people thought was going to happen when Trump just came out. They thought he was going to be announcing the stimulus package from Congress. Apparently, they don't have one yet. How is this possible? It's frickin' Wednesday. We've been talking about it since Friday. It's Wednesday. I don't know what they think. It's not going to get better. Oh, speaking of not getting better, not to lay more crap on you, but let's go down memory lane. $226. 3 weeks ago? What's today? Yeah, 3 weeks ago. Because February is a short month too. So 81,000, 2,700 dead, 30,000 recovered. March 4th, 94,000, 3,200 dead, 51,000 recovered. Last week, 121,000 cases, 4,300 dead, 6,600 recovered. Today, $211,000 cases. 121 last week, March 11th. 211,000 cases today. 8,700 people are dead. 83,000 have recovered. There are now more than 10% of the recoveries are deaths. So it's a little less than 10% of the total outcomes because you have to add the 87 to the 83. But this is creeping up, not down. More people are dying. And the recovery is shocking to me. I mean, we had 30,000 recovered, then 50,000 recovered, then 66. It slowed down tremendously. Now 83. So we went from 30 to 50 is 21,000 people recovered. Then 66, 15,000 people recovered. Then 83, which is 17,000 people recovered. So in any given week, maybe 20% of the total people recover. But in any week, 10% of those outcomes are death. And it's getting worse. Look at this. This is the rest of the world. Blew past China. China is still at 81,000. They were at 78,000 back here. So they've done a great job. They're pretty much stopped. Italy, 35,000 in a country with, I don't know the population. I guess 50 million tops. Let's find out. Can't leave a fact like that unknown, can we? Italy, population. Oh, that's right. We did that population pyramids last week. That was fun. 60 million. Oh, I was pretty close. All right. So 60 million people compared to 1.2 billion, 1.4 billion in China. So they've got 1/20th of China. They are 5% of China's population, yet they have about half the cases. So whatever Italy's doing, don't do that. Wow, what is Italy doing? It's such a nice country too. I'm reflecting on my last trip to Italy and trying to picture like where this is happening. I mean, Rome is a super crowded city, I guess, and they take the train. Oh, they take trains everywhere. That's true. They're all on the train. That's what it is. They're all on those frickin' trains. That's the main way people get around. I guess that's a couple of these European countries have that problem. But still, Germany doing okay. Not terrible, not great, but not terrible. We're doing terrible. We're already at 7,000 cases. Germany a month ago, well, they weren't even on the chart, were they? Look at that. Germany went from 19 to that. We had 50. Well, I guess Germany's doing a bit worse than us then in that case. I take it back. Italy had 374 and it grew that fast. That's what's really scary. Italy had 374 and it exploded into 35,000, 1,000 times. 1,000 times in 3 weeks. So you think this number is bad now? Try doing 1,000 times more in the hospitals. Try having 1,000 times more people having to go to the doctor. And it's still not even a big number. That would only be, well, no, it would be a big number. It'd be 7 million people. Wow, that would be that would be something. But that's what they're looking at. They're looking at that kind of spread. And that's what Trump said just now, which was probably the terrible thing to say, but Trump said this is the most virulent, blah, 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 whatever he said. But, most contagious. He didn't say virulent. So he's saying this is the most contagious virus. It's more contagious than the normal flu. And it's much worse outcome than the normal flu. And so you can go about your daily life and accept the fact that 100 million people will get it, and it's not the deaths. It's not that 2 million people are going to die, because like I've said before, 6 million people die of cancer every year, and 9 million people die of heart attacks, and several 100,000 people, 1 million people die of AIDS. There's plenty of things that kill you. Okay, so it's not necessarily that we're going to lose 2 million people, although obviously that sucks. It's the 20 million people that will be in the hospital. The 120 million people, oh no, 110, the 110 million people who haven't recovered. No, it's 120. I'm sorry, it's 100. I was right. It's 120 million people. The 120 million people who have not recovered yet. And you know, there were 80,000 here. So here's in February, 1 month ago, more than a month ago, there were 80,000 people infected, right? So these people had a month to recover or die. That's so they're still sick. Since then, we've had 120,000 new infections, but we still only have 80,000 recoveries. So yes, for a lot of people, and it's not most people, because the numbers say no. Well, no, I'm sorry. Let's take that back. There's probably a huge amount of unreported coronavirus. People get sick, they have a flu, they have a cold, they have a headache, and they go, I'm sick, and then they get better in 2 days or 3 days, and they go, oh well, I guess it wasn't that bad. That's coronavirus. They could go back to work and still be contagious and spread it around, and they have no idea. There's probably tons of that. So, you know, when they talk about confirmed, they have to have a reason to test somebody usually to say you have the coronavirus. It would be nice if they had the number tested. That would be a useful thing to know how many people are testing and how many people are confirmed out, how many people are being tested. Look at it, freaking Hawaii and Fiji or whatever the hell that is. And look at that, Greenland. I said this morning, like, how does Greenland have a testing kit? We don't have testing kits. Greenland has testing kits. This stupid, oh, that's Iceland. Iceland's got a lot apparently. Oh, this is a live one. We could actually find out. Iceland, 250 people. 5 have recovered. Denmark. Oh, Faroe Island. That's what that is. Faroe. I mean, place. Who the hell lives there? Greenland. One guy has it. the guy. You know that guy. He's the guy who lives in Greenland. If we go to the older places, though, I don't know if it's going to work. Oh yeah. 75 confirmed, 75 recovered. You know, so go zing zang. Look at this, 133, 130. Look at these guys. That's good. Go China. They're way better at this than we are. Look at them. 8,000, only 84 deaths. And most recovered. But oh, here you go. That's what I wanted to see though. This is a good example. Oh, that's Korea. Damn it. Now I want to be like right in the middle of China. Some places with a good amount of cases. Active. Here you go. Okay. Well, Shanghai. See, Shanghai doesn't prove it because Shanghai's so busy. It could be tourists. It could be anything. But they have, out of 360 people who had it, 32 are still active. 3 people died. I mean, they're doing a good job. Wow. You know, instead of like bad mouthing China, Trump should be like consulting with them for help. Holy crap. They really did have this thing under control. But it got out of the bottle. And unfortunately, I mean, talked about this from the beginning, China was the best place this could happen because they have the wherewithal to contain it. You know, remember when they built that hospital? They ran out and they built 2 hospitals, in fact. They ran out and built 2 hospitals in 10 days. They don't have 25 freaking meetings and they don't argue about it in the Senate and whatever. Somebody in China, the head of, you know, whoever the head of the health ministry is, says we need 2 hospitals. I don't even think he has to ask President Xi. I think he just says we need 2 hospitals. Therefore, that's why he's a minister of health. He gets to say we need 2 hospitals, build them here. And he doesn't have to go to the budget committee and he doesn't have to do anything else. This is what the government's for. You know, the Minister of Health says we need 2 hospitals. Let's build those hospitals. Where do you want them, sir? End of story. You know, to some extent, you have to have those powers in government, but somebody has to have some power. You know, it should be, but I mean, you know, obviously now government, you can find a million flaws with that idea because it would be terrible if anybody had power like that and they could go crazy. But oof, I'm just really mortified at what's happening here. See, we have no recoveries. Look at us. No recovery, no recovery, no recovery, no recovery, no recovery, no recovery, no recovery. Wow. Wow. Look, see, only 210 active because 7 died. We can kill them, but we can't fix them. Oh, oh my God. Oh, I am not laughing. It is sad. It is horrifying. I don't know. What do you guys think? I'm sorry. I'm just like, whoa, this is ridiculous. SKK? No, it wasn't SKK. Damn it. It was such a good one, too. It was some kind of financial something something. And it was an ultra short and it was better than Faz. Faz is good, but it was better than Faz. And I can't remember what it was. Let me see. BillStockWorld.com. I think I was calling it Crashiversary at the time. Crashiversary. There you go. Crashiversary week. That's the old Happy Crashiversary. Nope, that's too soon. I'm gonna go back further. Nope, really? 2011? That seems like interesting. Let's see. Crashiversary week in 2011. Oh, here we go. Oh, look at that. I made a link to it. Okay, so stock market crash year one review part 3. We did a review after year 1. Oh, here you go. So if you guys want to find it, it was a stock. Oh, here you go. I suggest reading this because this is a good review of the last time everything collapsed on us and what we did and what we said and so on and so forth. Let me see if I can put this into comments somehow. I don't think so. How do I? Nope. Oh, there we go. Let's try that. And then send to all. Okay, I guess that worked. I guess I had to respond to somebody who said something. All right, so thanks, Jed. That helped. And Randy says it may have been discontinued, right? We were going to check that, but that's okay. All right, let's take a look now and see what it says. So anyway, I'm not going to read this, but I mean, I do suggest like checking it out because this is what we were doing during the market crash. So there's a part 2 and a part. We left off part 2. I'm sure if you go to part 2, it'll lead you back to part 1 or something. But I was going through like what happened because it was a good time to review what happened when it all hit the fan. So SKF, there you go. See, I knew it had an SK. I couldn't get the T out of my head because of the stupid Tanger family factory outlets. SKF. And what was SKF? Now I don't even remember what it was though. Okay, we don't worry about that now. SKF. That's still a thing? Because we were loving it back then. I know that. Whoop, SKF. It is the ultra short financials. That's what it was. And that's what it did. Son of a bitch. I wish I remembered that sooner. Damn it. It's like a 3-time short on the financials. And it goes completely crazy. Yeah, look at it gapping up like that. So this could still though become a thing. Back to that article and let's see what I said about it. So when we got bullish, we shorted. Here's where it was at $210 in the crisis. All right, so it's like 40 now. Isn't that cute? But let's take a look because they probably have split and done crazy things to it. So we can't say that that's rational. SKF. And let's see what it's really done over time. Look at this. Wow, what the? It's a really big rollover-y thing. Performance profile. 2x, it's only 2x. I thought it was 3x. Let's look back at 2008. Holy shit, right? Oh, so it's been split and split and split apparently, this thing, because back then, you know, we were shorting it here and we made this much money. I mean, that was beyond insane. You know, at the time it was $200, so they split apparently 20 to 1. Oh, here's a split right here. Split 1 to 4. Oh, it tells you. And here's another split, 1 to 4 again. Did it happen again? No, it's a couple of 1 to 4 splits. It doesn't matter what it's split from though. What matters is how much it can climb. So logically, if they started at 1,000, 1,500, 1,000, so they started around, let's say they started 1,000, that's down here. They went from 1,000 to 4,500, so it went up 4.5 times. So that's realistic. You cannot imagine, here we're starting at 10, so 45 would be your target. Still a long way to go though, right? And then if we go to SKF, do we say? Frick, I can't get this in my head. SKF. If we go to SKF, we can see what kind of options they have. This will be a good hedge. Ooh, but they're only short term. All right. So July. So they're at 26 and we have a target of 45. Look at that. They don't even go higher than that. Damn it. Wow. How screwed up is that? You cannot buy a higher option than 35. So you'd have to start with something like, but on the other hand, that can sometimes be good though, because look, this one went for $7, right? The 30. And let's see what the 20 is. The 20 is $9.50. So there you go. So for $2.50, you can get a $10 spread. And you're starting at 20, that's already in the money. That's October. I don't know if I want to be in October. Oh, you have to be in October because July only goes up to 26. This is how unprepared we were for this. There's not even options that can cover the sort of thing that's happening right now. They have passed the maximum anybody had expected July to go to. I mean, this is really nuts, guys. So let's see what other good ideas I had. But also it's something you got to look at and say, well, let's see how bad things could really get. So long on FAS. This was when we thought we hit a dead bottom. So we shorted SKF. But like I said, we're obviously nowhere near the crisis point on SKF. We're nowhere near the crisis point on FAS. You can't tell because they split that a million times. The Russell, the 390 calls on the Russell, that's got to be 1,000 now, right? Oh, this is annoying, man. I got to get a tab. Yeah, put this up on my tabs. So the Russell now is oh, it wasn't the Russell. Wait, what? How are we shorting? How are we doing the Russell? Oh, the indexes. Oh, well, obviously. Wow. Oh, I wish I kept that one, huh? Long Russell 390. So we're complaining now that it's down to 1,000. GE, well, that didn't work out in the end, did it? We picked up GE at 7, which seemed like a great thing at the time, but that's been a long time. Oh, G's back at, I mean, G's like 11 now, I guess. Or well, who knows what it is now. That's messed up. I have no idea. Things are dropping so fast, you can't even tell where they are. G's back at 6. There we go. Back where it was in the days gone by. But of course, GE was having trouble before this. What is getting no response here? So here's GE. Ooh, Jesus. Look at that. Down, up, and down. And are they going to survive? I mean, there's a whole problem. You know, we're into negative rates now, or 0 rates, and that means that all the retirement funds are making no money. Retirement accounts are making no money. Anybody who's living off savings accounts making no money. They're not just not making money, but we're at the point where the banks are going to start confiscating your money for leaving it in there. They're going to start giving you negative rates. So everybody's going to cash, but I'm not sure that's a good idea because the banks are going to take it. Iran apparently having big spikes in virus cases. Wow. So GE is now back to the low lows, but they have pension issues. You have to know why people are down. And GE has massive unfunded pension liabilities. To some extent, the low rates will let them finance at low prices and do things. But the problem is, though, this pension fund they have, it's low funded. The government forced them to put a lot more money into it. That was a problem too, because now they put the money in there. They would have been better off keeping it inside the company and building the company, because it sure isn't going to do much good sitting in a freaking fund and gathering no interest. Anyway, so at the time it seemed like a good idea. Anyway, I'll defend that because I mean, obviously it was, because it went from 6 to 30, and it went pretty much steadily up from there. Wow. I mean, look, these things are all dead again. Bank of America is obviously not that bad. SKF is twice. Oh, we did SKF twice, different things. Short. Wow, this is crazy. The Disney 62 shares at $16. Holy, oh my God. Oh, and I was happy that I made 700. Oh, wait, I was happy to make 77% profit on that. Are you kidding me? I was happy about that. What a sucker. I can't believe I sold those. XLF was $6. Amazon was $62.50. That's funny. Target was $25. Hovnanian 65 cents. It's probably back to 65 cents now, right? Oh yeah, but they reverse split, so they are back to 65 cents. That basically is 65 cents. Look at this. Hovnanian sells houses, and yeah, I guess they probably can't build any houses right now, so they have no business effectively. But they still own the land, which they're paying taxes on, not generating any income, and they have to. Excuse me, they got a lot of leverage. But are they going to die is the question, because they're being priced like they're going to die. And at a certain point, you have to decide when the reward is far greater than the potential risk for getting into a stock. You know, I mean, this is, I'm sure everybody's like this. I'm sure Toll Brothers is like this. Yep, look at that, KB Homes. So is the entire housing industry going to go bust? You know, what industries are vital enough to bail out? And unfortunately, this is, again, goes back to the problem. What industries are going to curry Trump's favor? It's not so much who deserves to be bailed out, it's who's going to curry Trump's favor. And how much devastation is it going to do to the economy? You know, and like I said this morning, I said you really gotta just bail everyone out. You gotta say to every single business in the country, and every single working person in the country and say, whatever you made last year in March and April, we're going to guarantee you make the same in March and April. We will get you the money. So if you're an employee, all you have to do is go to a bank with your pay stub, and the government will cut you a check for that amount. And the banks will do the transaction. That's how I would do it. I wouldn't, it's difficult, obviously, to have, you don't want to have a thing where everybody goes somewhere to do something. So you go to the bank or you electronically do it or whatever. But I think it's easy enough, especially for the IRS or somebody, to determine like how much money did you make in March and April of last year, or tell the employers to submit the forms. They can do it for their employees. Every company can say, here's what we paid. And the government says, well, don't worry about that. We're going to pay all your employees for 2 months. And I already calculated that was like, it comes out to like $500 billion a month. It's not nothing. But just pay everybody's, and you don't have to pay everybody's salary, just the people who don't work, just the people who aren't working. It's if you're still working, if your industry is still functioning, you don't need to be bailed. You don't need that bailout, but the company should be bailed out. So the government should say to them, if you keep your employees and you pay your employees, we'll still guarantee you make the same profit you made last year. And that's a public record, so we know. So in Q4 last year, you made Q2 last year, this is what you made, this is what we're going to guarantee you're going to make. You want to keep things as normal as possible and as undisrupted as possible, so that, if your plumber is out of work for 2 months or can't visit people's houses, 2 months from now, he'll still be a plumber. Because 2 months from now, if he becomes a lawn mowing guy, or quits and moves or whatever because he can't afford his house, you suddenly don't have any plumbers, you don't have any electricians, you don't have any this and that. You can't just, when you throw millions and millions of people out of work suddenly, they've got to scramble to do something with their lives. They've got to find something in some way, and the longer you leave it, the more disruption gets caused, and that cascades, because then they walk out on the landlord, and then they have to go somewhere else, and they take a new lease somewhere else, and they're not coming back. And now there's a hole where that person used to be, and there's a hole in the neighborhood, and the landlord can't make his rents, and he can't find people to fill up the building, and blah, blah, blah. It's just endless. And that's what government has to step in and fix, and we're dithering. And the dithering is going to kill us. And at the moment, we are down 8.5% on the S&P, and the Dow is down just about 2,000 points again. You think it can't go lower, but it can. It's just unbelievable. And you know what? We're unfortunately tomorrow, if we're not bouncing, we're going to have to add more puts tomorrow, and the next day we're going to have to add more puts, and it's not going to stop. You got to keep layering on these hedges. That's critical, because if it never stops, that's going to be the only money you have left. So everybody's got to have hedges. I want to make that really clear, because this can get much, much worse. You can't just cross your fingers and hope we recover. You have to have hedges. Howard says, Phil, you look so young in that picture back then. Did I? I was like, I'm sure I did. Oh, yeah. I don't think I look that different. Come on. Oh, yes, I do. All right. I don't even want to look at myself now. Wow. 2009. So it's 10 years ago. I've got a beard now. I don't think I look that different. Still don't have the same no hair. At least I'm not getting much worse. But anyway, all right. So what else can we talk about? Because this is very depressing. I want to talk about happy things. Hey, you guys tell me stuff. What's happening on the ground? Let's talk about that. What's the experience? My daughters lost their jobs, both of them. Jackie, my younger one, was working at a Chinese restaurant, and she was telling me for like a couple of weeks now, she said people aren't coming to the restaurant anymore. They think that because we're a Chinese restaurant, we have the virus. And it got so bad that they shut down. And that was the best Chinese food in the area by far. So it was, I mean, I can't believe it. I used to get that stuff twice a week at least. And I certainly wouldn't have stopped because it's a silly virus. But of course, you know, it's not the way people act. And the schools are shut down. Even the high school shut down. Everybody's working remotely, which is kind of bogus, but some of them are just completely shutting down, not even bothering. And that's a national crisis too, having all the kids home. Oil is now $20.70. Oil is down 23% today, even though there is a big draw in product, even though somebody used a lot of product this last week. Doesn't seem to matter. So we are below, I mean, 2,300. The S&P is now below 2,300. Just touched that line. The Dow is 19,100. The NASDAQ, I missed the number, but it's terrible. NASDAQ 66, well, that's the other NASDAQ. NASDAQ's down 8%. 600 points on the main NASDAQ today. 67 something. I can't believe I made money on the S&P bullish today. That's crazy. We took that first move up over 2,400 and stopped out. The second time we didn't quite get to 2,400. I did play another time though. I was doing better, but then that didn't make it and it went down, so we gave up on that. But this is, I mean, I was thinking of going to the Dow at 20,000. I was like, oh, 20,000 is a good line. That should hold. But it's a terrible line if you can't hold it. The Russell 972, still better than 300 it was back in 2009. Yeah. So, I mean, you know, yeah, this is the thing. We were doing a show, and I just happened to be on right when the markets were collapsing. I went to New York City, and I got on this show, and then the time I traveled to the show, the market just went into free fall. So I got on the air, and it was supposed to be an hour show. We did it for 3. We ended up staying on the air until the market closed for 3 hours. And the whole time I just kept looking at, all I was doing was, and that was one day in which I think it was probably at the time was the biggest drop of a single day ever, until now. And I was just like going, holy shit. I said, how could you not buy these things at these prices? But honestly, we're not there yet. We're not. It's that this is only, as I said, although now it's worse, but if you look at where we really are, everybody looks at the top, but you have to look at back. Where were we in January is the question. Not where was the top, but where were we in January? This was all bullshit, obviously. So how far down are we really? We're down from 3,200 basically where we started the year, and down to 2,200. So it's about 1,000. We're down about 30%. 40% is where you got to say, I think it's probably time to buy. And obviously I'm guilty of saying, you know, we've already taken some pokes on some shorts, but the shorts were set up to trigger buys at another 20 to 40% drop. It wasn't like we were thinking we were going to buy right now. The only problem is it's painful because if I get the long-term portfolio, it's painful because look, because these are already down 35%, 77%, 226%, freaking ET, 15%, 50%. So in other words, okay, great. It's nice that we raised 18,000 in cash here and 15,000 in cash, but now we're freaking losing all this money too. So it didn't really help. We you know, well, if you look at it, here's what happened. We collected 18.7, 15 is 23, 33, 37, 43, 50, let's say, 5,500. So here's 5,500 bucks collected on short puts. We've lost 20, 30. We've lost 30. So we collected 55,000, lost 30. So we're plus 25,000. That's covering the margin. It's not a catastrophe yet. Now you got to say, though, what about these positions? Well, we sold the IBM $80 put. Are we worried about that? Not theoretically. We sold the Intel $30 puts. Intel's a freaking 48. Not worried about that, theoretically. Tenet Healthcare, $15 put. It's already a freaking 1146. That was a few days ago. Jesus Christ. It makes no sense. So it's a freaking hospital chain. Well, who's going to be busy in the next few months? Hospitals. Hanesbrand underwear. Oh, look, it's actually Hanesbrand's working out. Oh, that's crazy. Look at that. One's working out. We gotta wait. We gotta celebrate this. HBI. What did they do right? Nothing really. No, we just caught them on a good day. So it's down 10% today, but they were doing good for a day. And we just happened to buy on the right day. Energy Transfer. Again, it's a pipeline company. They don't sell the oil. They're a pipeline company. They transmit the oil. They transmit the natural gas. They are carrying it. If people want to sell it, they have to pay for someone to move it from one place to the other. We're not using oil. In fact, today we showed that we had a draw on gasoline and a draw on distillates. We are still using oil. We are still functioning as an economy, though you would not know it. Hawaiian Holdings is down 30. That cannot be today. What is Hawaiian Holdings? That's, I mean, it's Hawaiian Airlines, but how do you do the symbol on those guys? That, Hawaiian Holdings, HA. There you go. No, look at that. Moody's places all ratings of Hawaiian Holdings on review for downgrade. Duh. Obviously, they're all going to have bad ratings. Oh, for God's sake. Is this really what you're going to react to now? I got news for you. Every airline is going to get their ratings put on hold and reviewed for downgrade, and they'll be issued downgrades. They were freaking junk anyway. BA3 is junk. Oh my God, people are crazy. See there, just featured as having good PE ratios. Wow. They withdraw their view, obviously, withdraw guidance. Look how crazy this all is. Expected first quarter. Oh, wow. I wonder how wrong this was. What were they saying? Look at their comparison. Very, very small drops they were expecting. They're completely wrong, obviously. Still, so here's the thing. Does Hawaiian Airlines survive? Can they get through this? They made $200 million last year. They had $2 billion in sales. Their balance sheet, they have $300 million in cash. They also have short-term investments, so they're actually doing better than that. They got like $600 million that they can add. Well, think about the short-term. Think about every company with short-term investments. How much are those being cut down right now? And so they've got cash. They got receivable. Well, I don't. What's inventory for an airline? Then they got debts. They got a couple of $1 billion in debt, let's say. All right, but that's not a problem when you're making $300 million a year. And market cap wise, they are by the whole company for what they made last year, or for, well, they made 200 million last year. 200 million. So they made 200 million last year, and you can now buy the company for $350 million if you dare. If you dare. Marriott down 32% today. Hilton's down 23%. Hyatt's down 29%. today. I know what Marriott symbol is. I don't know Hawaiian. I don't know what, wait, the thing's in the way. It's Hyatt. Hyatt, oh, it's just H? Never play that. Look at that. Hyatt Hotels, $3 billion for the whole kit and caboodle. 5 billion in revenues, 766 million in profit. They're no Hawaiian airline, but you know, and you can buy them for $3 billion bucks. What's going to happen? Marriott, MAR. And remember, we did the Marriott Vacation Club a while ago. That was a great play for us. That was VAC. I wonder how they're doing. Same thing. $15 billion for Marriott. Now, Marriott, because they just merged with Starwood, they are the biggest hotel company in the world. They control more than half of the hotels on the planet Earth are Marriott hotels. And you could argue that they are going to go bankrupt from this. But you can argue anybody's going to go bankrupt from this if you extrapolate it. And that's the thing. I mean, the problem is that when you're sitting in the middle of it and you don't see the end of it, you can only think the worst of everything. But you know, you can only have 3 days of 35% drops before you're at zero. That means there are people selling this today who feel apparently very strongly that this stock is worthless. That's a bankruptcy bet. When a stock goes down 35% in a day, that's a bankruptcy bet. And that bet is being placed effectively on all the companies. And, you know, it's hard to say if this is, you know, who benefits from something like this is a question. Who's going to make all the money? Because, like I said, I don't think I finished my thought before, but it's like, you know, I don't want to be callous, but again, 6 million people die of cancer, 9 million people die of heart attacks, 1 million people die of AIDS, which is also a virus. But nobody cared about AIDS because it only affected gay people. Gay people cared, but you know, so the government we never invested the kind of money we should have invested in virus research, in stopping this sort of thing and understanding it better. You know, as many times as people said AIDS is a national, international emergency, and that we should be, you know, doing a space, you know, a moonshot sort of thing to stop AIDS, because it's not just AIDS. The fact that anybody can be affected by a virus, the fact that this many people can get something, it's only one little mutation away from affecting everybody. And this isn't the same as AIDS, obviously, but this is another devastating virus that's much more communicable than AIDS, obviously, because AIDS is difficult to transmit, and thank God, and this is not difficult to transmit. But still, it's not going to kill as many people as cancer. It's not going to kill as many people as heart attacks, even in a worst case scenario. Even if you have 100 million people infected, and even if 10 million people die, which would be incredibly large and very unlikely, you know, but even if it was that bad, it's still survivable, because 14 million people die, 15 million people die of heart attacks and cancer every year. And we move on. And some of those people are young, and some people, and obviously it's the same thing. Most people are old, some people are young, it's sudden death for people you never expected, blah, blah, blah. But, you know, what are you going to do? We don't stop the world. And now England at first was going to let everyone catch it because it builds up a thing called herd resistance. In other words, if everybody gets a virus, yes, some people are going to die, but on the whole, it's better that everybody just gets it and gets it over with and builds up a resistance to it. That's how you make your people stronger, is they're going to be resistant to the virus. That's why the Spanish flu was carried around by soldiers. And by the way, the Spanish flu, apparently, it possibly originated in America, the Spanish flu. It was because our soldiers were in Europe in World War II, and they took American viruses to Europe, which the same way we killed the Indians with the European viruses when we first came here, we brought American viruses over to Europe in 1918, and that's where the Spanish flu came from, in theory. And that killed millions of people because our soldiers were everywhere and they were mingling with people all over the place. And it's just, I mean, obviously people are fighting wars and you're in barracks and you're in trenches and you're in whatever's and you're marching in formation. I mean, there's, you can't not march, right? Like if they're doing drills and things like that, they don't care if you're sick, you get up there and march. That was a disaster. That killed more people than the actual war. But again, life goes on though, right? What happened after the Spanish flu? Spanish flu is like 1918. What happened after that? The Roaring 20s. Because we had just endured this tragedy worldwide, and after it was gone, everybody was like, yeah, party time. Everybody's really happy again. Wow. Okay, Dow is now down more than 10%. S&P is down just about 10% at the moment. Oh, wow. Horrible. Who's this? Somebody's talking on CNBC. I'm not sure what he's saying. They're not captioning it. But he's home. Everybody's home. They just talk to people on Skype now for TV. That's it. I wonder what's going to happen with shows. Like all the shows are canceled because people aren't. You can't put the production together with people. So now they're not doing shows. And what are they going to do? They're going to start shooting from home, like every program. It's like that'd be funny if Friends, but every friend is in a different apartment with their Skype. Okay, wait, I want that series. I'm optioning that series. That sounds good. But I don't know. I mean, all 11 S&P sectors down by 4.5% or more. So obviously the S&P is down 10%. Wow. This is horrific. I'm just blown away by this hotel stuff. This is crazy. So, I'm sorry, there's no, a hedge is a hedge, but there's no way to guard against this. This is a complete look. Oh my God. This is ridiculous. That's more than a third wiped out in 4 weeks, 1 month. And I'd say almost, it's like, I'd say it is kind of accelerating. I mean, I don't think we're done. When you see these sticks accelerating, this is certainly accelerating the NASDAQ, which is that's why we're still using the QQQs, by the way, because look at this. This is still accelerating, and the NASDAQ is by far the most overbought index. We're not even down to the 2019 lows yet. This is we're unrealistic still on the NASDAQ. Look at that monthly. There's your support. 4,000, 5,000, that's your support range. This isn't support. So you're talking about 7,000, let's say just to 5,000, that's 2 into 7 is it's 25%, right? 2 divided by 7, 28%. So 28% down. That means that the Qs will go up. Let's talk. There's something useful we can do. Let's talk about the hedge. So if we take SQQQ. It's at 30, and we just said it was 27%. So 3 times that is going to be 3 times 27 is going to be 60 and 80%. So we're going to go up 80%, about 24 bucks. So easily 50. Easily top out at 50. And the funny thing about the market when it's like this, and here's where you save your portfolio, is the thing about the market when it's like this is you can take the 30s for 920, right? See them? So 920 right now. And you can sell the 40s for 7 or 7, yeah, let's say 7. So that's 920 and 7, that's 220. Or you can do the 6s for 650. So and this is what you're combining with the put sales. You understand? So you start out with, you take the 20, I'm sorry, the 30s. The 30s for 920, the 45s for more than 620. So it's a $3 spread. So you're paying $3 for $15 spread. So let's say we did 50, let's say you have a $100,000 portfolio. Let's just be calm about this. You have a $100,000 portfolio. If you take 30 of them, you take 30 of those spreads, they're $3 spreads, going to cost you $9,000 in your $100,000 portfolio. You're going to stop out of it when it gets to 5, right? So if it goes down to 5,000, your $9,000 goes to 5,000. That means probably the crisis is over and you can stop out. If you don't stop out, then you're going to collect your money. All right, and this is April, by the way. This is just assuming the next week is terrible. Now, what offsetting hedge do we want? $9,000, let's remember. So then you go back to the thing, and then you say, well, Marriott, are they really going to let Marriott completely crash and burn? It's at 50 bucks now. It went down $24 today. There's not even options this low. Yet you can sell the 2022 $45 puts for $18. You only have to sell 5 to collect $9,000. The $9,000 you're paying for that spread, which gives you $45,000 worth of protection, you can pay for by selling 5 Marriott puts. 5 Marriott puts cost you $22,500, I believe is the number. Yes, I'm not going to do them. I'm not going to check that. So for $22,500 that you're committing to, and I'm saying that, and like I said, you're going to salvage 5,000 off the put, so you're really only committing to $17,000. So you're committing to buying $17,000 worth of Marriott stock at 45. That's basically what you're committing to. 500 shares of Marriott. That's your whole commitment, and there you get the free spread. Okay, there's no, this is what you have to do. You have to do this. You're spending 0 money. You're making a commitment to buy Marriott. Now, maybe you've already done that. Like obviously in the long-term portfolio, we've already made a ton of commitments. So we only need the spread. We already collected a ton of cash, didn't we? We collected 70,000 last week and 80,000 this week. So how do we hedge that? We hedge that by adding these spreads. And worst comes to worst, we'll make a shitload of money on the spreads. Plenty of money to buy a lot of these stocks at insanely low prices. That's how you do this. And you have to go through every portfolio and make sure you've got a hedge that's going to give you half the money back if it keeps collapsing. Find a way and talk to me in chat and tell me what your problem is. And let's fix this stuff. But geez, I mean, how can you not have a hedge when the NASDAQ can fall this much further? You can't stop people from panicking, and that is panic. That is just panic. And there's no support. It's an illusion because you got to look at the longer term. And like I said, low volume, low volume, low volume, low volume. High volume, the red sticks. High volume. Low volume, super low volume in the last part of the spike. And now high volume. The volume was never like this. It wasn't this high in 2008. This is crazy. And what if Apple starts falling like this? Apple leads the NASDAQ. Apple's already falling hard, but what if it really falls apart? What if Apple, thank God. I mean, they sell you phones. How are you going to live without your phone? I think that's probably like the last thing people are going to give up is going to be their phones. That's your contact with the world now. That and webinars, I guess. Maybe I should do webinars every day. Am I keeping you guys company or am I depressing you? Probably depressing you. I'm sorry we can't do better. So let's see. How are we doing for questions? Do you think bonds are signaling that some relief is coming? Big drop in the past 2 days. Why do they play games with the hedges? Wait, is that 2 questions? Yes. Sorry. Jed, do you think bonds are signaling that some relief is coming? Big drop in the last 2 days. Yes, something crazy happened, right? Because where's my futures? We noticed that earlier. Look at this crap. Well, sorry, let's look at this. Because we had those TLT shorts and all of a sudden they started working again. We were getting killed and then all of a sudden it started working again. We just cashed them today though. I'm not sure what that signal is though, right? Because if the bond goes higher, the rates are lower. If the bond goes lower, the rates are higher. So somehow someone decided that this insane stimulus package is finally the tipping point that's going to make the US unable to borrow at those crazy low rates. We could call, the Fed can say whatever they want. It's like Greece. Greece has a Fed. They could set the rate at whatever they want, but if the government has to borrow money, they have to borrow money, then the cost of rolling it over is up to the free market. And the free market is putting its foot down saying, no, 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 no. You are going from 23 trillion in debt. Where's that? I'm going to get rid of that. National debt clock. So yeah, 23 and a half. When did that happen? Oh my God. All right. Wow. Wow. All right. Anyway, so you can't go for it's too much. I can't take it. Okay, so finally somebody's going to put their foot down. For some reason, arbitrarily, 23.5 trillion. Okay, we'll let you go to 0% at 23.5 trillion, but 26.5 trillion, because we are literally talking about $3 trillion worth of stimulus. $26.5 trillion. That's what the bond market did. Is finally someone said that's a lot of debt. That debt exceeds your GDP by quite a lot. 30%, in fact. And our GDP isn't even actually 20 trillion, but it's probably close. I think it's like around 19. Debt to GDP ratio, 1960, 53%, 1980, 34%, 2000, 58%. Now, 107%. And like I said, if you get to $26 trillion and a half, you are in the 130s. Wow. I mean, just words fail me at this point, because I mean, how can you even have that? And look right here, look at this thing. Oh, here you go. Budget deficit, $1.6 trillion before we do anything bad. That's Trump's current budget deficit, $1.6 trillion. They're talking about, well, first of all, he was talking about deleting this. deleting 1.2 trillion of payroll taxes. He was going to say, forget that. There's fortunately not much left to cut from the corporate taxes. That's the funny thing about corporate taxes. You can't cut them anymore. They don't pay anything. We, the people, pay 1.7 trillion, and payroll tax is also paid by we, the people, 1.2. So we, the people, are paying $3 trillion. Corporations are paying $235 billion. Well, not even 1/10 of what the people are paying. And I know corporations like to say we pay the payroll tax too, but they don't. That's your salary. That's they. You know what? It's funny because they say that, but the reality is that they don't count that as taxes. There's no company there that says, oh, I pay ADP and then I pay the government. That's not how it works. ADP gives you a number, you pay it, and it goes into a thing, and that's it. That is a salary you pay. So the company, that's the employee cost you their income and their payroll tax. That's what an employee cost, plus any other benefits you have. That's what your employee cost is. You don't sit there and say, I'm patriotically paying my government, blah, blah, blah. You wouldn't pay it if you didn't have to. It's part of the salary package. Here's the tariff revenue still coming in. Debt still pile, local debt still pile. We didn't even talk about that. There's another couple of trillion local debt. Here's the state debts. Oh, and the people pay this too. State tax revenue, right? Of course, local tax revenue. There's another $3 trillion paid by the people. So it's just crazy. Medicare, 1.2 trillion. Social Security, $1 trillion. So to this, we are going to add universal basic income. Right? So if we pay that and give 300, wait, how do you do this? It says to go away. So we give, what we see, 210 million people over the age of 18 times 12,000 a year, 252 billion. That can't be all. Gonna have to write it out. 210 million times 12,000. That's how many millions? 252,000. It's only $252 billion. I'm still having trouble with this. 210 million people times $12,000. No, 2 trillion, 2.5 trillion. So Andy Yang's thing says, give the people $2.5 trillion. That's the, now I'm comfortable with it. I kept saying 1,200, I think. So this is what a universal basic income looks like. You give everybody $1,000 a month. Every single person over the age of 18 gets $1,000 a month. Now, obviously people say, oh, but then they won't work. That's really not probably the case. Not that many people are going to be happy living on 12,000 a year. My daughter would be. My oldest daughter is a what do you call her? A hippie, basically. she has no needs and no desires. I don't know how she can be my daughter, but she is perfectly happy as long as she has an internet connection and her laptop. She has to have her, she has a $3,000 laptop, but as long as she has an internet connection and her laptop that she can do her art on, because she's got the drawing tools and all that, and that's it. And some occasional food once in a while, but not much. She's perfectly happy because she's a college kid, of course, and you can do that in college. But she has very little needs, and she's not a person. She's not big on fashion or things or fancy stuff. So God bless her. She gets by fine. So she might be one of those people who chooses not to work. But it's not a bad thing if people choose not to work, because we have more people working than we need. We obviously have no unemployment, so you need people. But then you have to just give them a proper incentive to work, and a part-time job. If a part-time job were actually comfortable for somebody, then people would be happy to do it. You know, in other words, if you had $12,000 and working McDonald's for another $12,000 gives you enough money to put a roof over your head, then McDonald's becomes an okay job. Same thing for Walmart or whatever. People will just do the jobs more so that they want to do rather than rather than everything they have to do. And you might think, well, nobody's ever going to clean a bathroom. Well, you're going to have to pay someone to clean a bathroom. You know, you want someone to scrub your toilets, they're not going to do it for $10 an hour anymore. You're going to have to pay them like a real person if you want your toilet scrubbed, because otherwise it won't be worth it to them. But that money goes back into the economy and increases our GDP. And I was talking this morning about there's a multiplier effect. So we could end up having a $6 trillion boost to our GDP, 20% boost to our GDP. And that money then gets taxed and it comes back. So a huge portion of the money that we put in comes back. You're essentially eliminating poverty. And don't forget, with this basic income, you don't have to pay out that much of you won't have to raise Social Security. You won't have to pay as much Medicaid and Medicare. And if we do a universal health care, you won't have to do that either. You know, and that's the other thing people don't realize. Bernie Sanders talks about universal health care. And the Republicans say, oh my God, that's going to cost $2 trillion a year. We're already paying $1.2 trillion just for frickin' Medicare. The rest is being paid by these poor sons of bitches. The people are paying the rest, and they're paying a lot more than $2 trillion a year. They're paying like it's almost $4 trillion now that we're paying in medical costs in the United States. That includes this number here. We go to universal medical care, it'll cost less, even if it is $3 trillion a year, which has been disproven. But even if it was $3 trillion a year, it's still less than we're paying now. So that also would put a dent in this number, and that would put a dent in this number, because if you have universal health care, you don't need this. You eliminate poverty. And basically people will and people have much more money to spend. It would be thriving for arts, entertainment, things like that. It would not be a worse place in the world to do that. And all you have to do to pay for this is take this GDP. Well, that's not the GDP. If you take our GDP and you put a 10% VAT, a value-added tax, on everything that people buy, and there's the money. Boom, paid for. Problem solved. It's not just a short-term fix. I think we're going to end up trying it. I think that they're going to hand out money to people, and you'll see what happens. But it doesn't work if you only do it for a couple of months, obviously. But conceptually, people are going to like it, and they're going to start pushing for it. And they're going to say, "Hey, it's a huge thing." And the government can afford to do it. It can be done, but you have to, obviously, what you're doing is saying, well, now it's going to be harder for Jeff Bezos to have $170 billion. It'll be harder for rich people to get to those kind of levels. And why shouldn't it be? Who the frick needs that much money? I don't care what you did or what you invented. Bill Gates agrees with me. It's like, doesn't matter what you did, what you invented, or what you did, that nobody should have that much money. It's ridiculous. And it's, you know, it's everybody, it's all, there's a certain thing, although the Fed prints it constantly, there's a thing called all the money in the world. It's a real thing. There's only so much money actually in the world. And if one person takes a huge chunk of it, it's less for everyone else. You know, that's unfortunately the big problem we have in society with these things. So was that a question? I don't remember if we had a question to that. So let's see, where are we? So yeah, we were talking about that's how we got on that. So we were talking about the bonds. That's what happened. Why do they play games with the hedges? I'm not sure who you mean to them as far as prices. No, they're not playing games. There's two factors to the pricing here. It's I mean, I think you might be talking about the bid ask or whatever, but the problem is that's just the way the brokers do it, and obviously they're going to err on the side of caution. But there's a couple of things going on here. There's the internal VIX, the implied volatility of any security that you're trading. So in other words, if you are trying to buy Holy cow, look how many of these things there are. Oh, that's QQQ. It's not even SQQ. Ha, silly me. No wonder there's so many. All right. So SQQQ is pretty heavily traded. If you want to buy the September, where are we? We're at 30. Oh, you can't even do, nope, sorry, bad example. All right, let's talk about April. Nope, April's too tight. April's too tight, and the other one's not traded. This is a terrible example. It's January. Let's go to January. There you go. That's what I'm talking about. So if you wanted to hedge SQQQ, there's a couple of factors here. First of all, the implied volatility of the instrument. So SQQQ is very volatile. In fact, today it's down, it's up $5 today. So how far can it move by January? Well, it could obviously between now and January, it can move $500 because you're talking about 303 days from now. So if it moves $5 today, how much can it move in 300 days? A lot. Okay, so there's an implied volatility to the stock that's extremely high. So if you want to bet on the 30s, they're telling you that they could move, they anticipate it could easily move $15 up or $15 down, so it could move $30. It can move 100% up or down from where it is now. So if you sold the puts and calls, you'd get $30 back on the $30 puts and calls. That seems like a lot, right? You'd think I should take that bet. What's the chance it's going to be 60? Well, 60 would be up 100%, and that would mean that the market would have to be down about 30% for that to happen. That is highly unlikely, but are you feeling that lucky? But look, I mean, look at the volatility implication here. You know, it's more than half. They easily feel that SQQ can move more than half. So there's the implied volatility mathematically of how much it could move, but then there's also supply and demand. And clearly here there's not a lot of action going on in these things. You have a bid of 1450 and ask of 1810. So the second you buy it, if you buy this thing for 15 bucks, because you're not going to get 1450, nobody's buying. But let's say you bid $15 and somebody and the last sale was 1450, so this guy's not wrong. But let's say you are bidding 1450 on it and you get it. As soon as you get filled on, and if you're shorting it for 1450, you're immediately going to hit, the broker is going to immediately say, well, if you try to buy it back, it's 1810, because that's what somebody's asking. And that's horrible. And that's one of the problems we have with options is as soon as we take the options, because of the bid-ask spreads, we basically look like we're losing money. So the more options we take, the more money it looks like we lose right away, just based on the bid-ask spreads. Then the external VIX also influences that as well. So, you know, so you've got the internal volatility factor, the external VIX factor, and then there's supply and demand. How many people are trying to buy one instrument versus another? How many people are buying puts versus how many people are buying calls? And you can always look at that and you can say, well, okay, let's say $10 up is 15.17. So say it's 16.50 or say it's 16. $10 down, 30, and I'm sorry, you guys can't see the comments, but they're in the way. So $10 down is 20, and it's 9. So it's 9 here, or what did I say it was 16 here. So 16 here or 9 here. So you can do a 30, what do we say it is, a 14, 16.50? So 16.50 and 16, wow. You see that? That's like free. It's a $2 spread. It's a $10 spread. You can buy this for $2. And it's at the money. But that's the things, those are the things you want to take advantage of, right? That's a cheap hedge. And then, and I wouldn't right away jump on that, but what you do is as soon as I see something like that, and I say, holy crap, then I say, well, okay, what else can we do? How low can we go? Well, look, the price hasn't changed. The 26s are still $17. So why would I buy this for 17 when I could buy this for 17? How much am I willing to pay? The 25s are going to be more liquid because their $5 increments are. That's going to be like $17.50. I'm willing to pay $17.50. So there's that part solved, $17.50. Now, when do I leave the 15 range? Look at that. He sold the 45, sold for 14. So if I could buy the 25 for $17.50, which is deep in the money, and I could sell the 45 for 14, I'm happy with 14. I have a $2.50 spread. I pay $2.50 for a $20 spread. Now, you're not going to have an easy time filling that. You have to wait and be patient and let it fill. And my advice is usually try to play the momentum, although in this kind of market that's scary, but you try to play the momentum. If the NASDAQ's going up, you buy, it doesn't matter if you're buying 10 or whatever, but you buy 125 when you get a fill for $16.50 if you're bidding it, or $17 or whatever, it just changed. Oh, you guys are doing this while I'm talking. You're really killing me. All right. So if you get your fill for $17, even though the last sale was $14.60, you get a fill for $17. After you get that, assuming the NASDAQ is going lower and this is going up, you get this fill and then you fill that one. If it's going the other way, maybe you want to try selling this one first, the 45, and see if you can get your $14 like somebody's doing. If you get, so I would put an offer in on both sides, and whichever one gets filled first, then you've got to scramble and fill the other one. But if you catch it right, you can actually do better on both sides. So you put in a bid on both that you are happy with and make sure it's in your favor. And then whichever one fills, then you can take a hit on the other side. You can afford it because you've got a good fill. Obviously, you put in a bid for both at a good fill that you're comfortable with. But in other words, so if I say, I'm certainly willing to sell these for $15 for sure, and I say, I'm certainly willing to buy these for, oh, see, 17 went. So see that this person was good. Good job, whoever that was. So the person waited for 17. They got their fill. Here's 17.27. Now 16.90 is the next bid. So I put in my bid for 17 here. I'm willing to pay 17 for the 25s, and I'm asking for 15 here. I don't care which one fills first. Whichever one fills first, it's fine. If this one fills first, and it probably will because it's closer to the strike, then I have to make sure I fill this out. But my worst case scenario is 1250. That's my worst case. But I can go from 15. Once that fills, I go from 15 to 14 to 13. And if I fill it 13 and I got this one for 17, that means I paid $4 for a $20 spread. But there are going to be times you're lucky and actually fill both at the good price. And then I've got 1 and 1. And if my goal is to get 10, I just go through that process 10 times, and you'll start to get a feel for it as to how it moves and when is a good time to bid and when's not a good time to bid. And you watch your little 5-minute chart and see what's happening. And in fact, right now the indexes are bouncing tremendously for God knows what reason. What happened? I don't know. Now we're only down 7.5%. I have no idea why. So anyway, you do your bid ask, and so the things are going down now. So I don't want to be betting high on here, but I do want to grab these as fast as I can because I'm lucky I got that price. He dropped 12.60 already. So whoever got 14, that was a good fill, right? So now you got your fill at 14. Now you wait since the market's turning, and you see how good we do, and you watch it very closely, and until it turns back, until it stops going, until this stops going lower, you don't have to worry. So you just keep watching the tick and seeing that it's 30.16 now. As long as it's going down, you don't have to pull the trigger, but you want to see this go lower. Maybe it'll go to 16, maybe it'll go to 15, maybe you'll have a $1 spread, but you got to watch it. And then you get the fill on 1 contract, 2 contracts, and then when that's done, you put up 2 more contracts and do those, and then you get a fill and you do 2 more. There's no hurry. You don't have an urgency this minute to do these fills. You got to learn how to fill things properly. You've got to put in your bids and set limits and say, this is all I will pay. I will not overpay. And you'd be amazed at how much more money you make if you just care about every nickel that you pay for these options. Ooh, we're running late now. Look at that. I thought it was done being depressing. I got the thing. Brandon says, do you think PAA and ET go under? I don't see it. I just think they're being thrown away with the oil industry, and it makes no sense. It's not the business they're in. I could be famous last words. And look, again, when everything is going bust, when commerce is grinding to a halt, when there are no cars on the street, oh my God, my friends in California are like having the best time. They're like, we're driving on the freeway and there's no cars and there's no traffic. It's like it's literally like what's that show with the zombies? I don't know, whatever that one is with Walking Dead. It's like Walking Dead. It's like empty highways, empty malls, empty thing. Wherever you go, it's like dead. In fact, I'm kind of psyched to go out now. I'm going to go take my bike out and ride around town because friends of mine have been telling me it's creepy out there. So 245 margin call, blah, blah, blah. Well, the margin call seems to have helped because everything's popping back up now. Oh, look at that NASDAQ go. And where are the 25s now? 1460. Look at that. How nice is that, right? Everything's coming down. APRN has, oh, that's Blue Apron. It's gone from 2 to 19 in a week. This is nuts. Blue Apron makes the food that you eat at home. Where are we? I need a chart. Wow. And I agree, this thing is good for their model, but holy shit. You have 100% today. Wow. APRN. This is so crazy. So here's the thing. They did 800 million in sales last year. Not last year, 17, 668, 455. Their business was going down the tubes. It wasn't working out. So now people are like, oh, they're going to deliver food you can eat at home. Well, yes and no, because let's not forget that the stock price going up doesn't make them have money. Maybe they can do it, maybe they can sell someone an offering or something like that, but it doesn't particularly give the company any money. So they lost money last year. They were going to lose money this year. They've never made a profit. They've got employees. They have to pay the employees. They have to train the employees. They have to buy the food, which is going to be tricky in these times, perhaps. They have to deliver the food, which is going to be tricky in these times, perhaps. And they have to scale the business up to be able to handle double the capacity. That's going to take them a year or so. We had this conversation about Tesla, nobody believed it. And of course, now Tesla's crashing out because the reality is you aren't actually making that many cars. And it's the same thing here. How many meals can they suddenly make? Everything is not Netflix. Netflix just flips a button and more subscribers come on. They add us, and now with Amazon, it's easy because they don't have to worry about servers. You know, when you're using Amazon Web Services or whatever, you have infinite server capacity. So it's no longer a thing where you can't expand an online business. But that's not true when you have people putting meals together and putting them in boxes and shipping them to people. That's a whole different thing. And think of their supply chain. Everything's got to be wrapped and put together and put in little bins and blah, blah, blah. You don't know where that supply chain is going to fall apart. You know, the whole company could fall apart just because they don't have little microwavable trays. Their whole business plan can fall apart because of one thing that isn't there. Believe me, Blue Apron doesn't have contingency plans for what happens if we can't get our 6x9 inch microwavable trays with the plastic covers on it. You know, the heat seal plastic covers. That's an assumed thing, as I'm sure you can think of many businesses where you just assume stuff is going to be there. You know, you don't go into the painting business and not expect to be able to buy paintbrushes. You don't say, oh, I'm in the painting business, but latex paint is no longer available due to supply shortages. It's not something you plan on when you have a business. And that's why the auto business is so screwed, because the auto business depends on parts from all over the world. And any one part that's missing out of 600 parts in a car makes the whole car not work. I mean, not everything, but you get the idea. I mean, like, if you're putting out a car, it has to have all its bits. When Boeing puts together a plane, it has to fly. That's why Boeing asked for a bailout, not just for themselves, but for their suppliers, because Boeing, doesn't matter if you fix Boeing if you don't fix their suppliers, because the plane can't fly. For want of a nail, the horse was lost in the battle, or I forget. There's a poem that's because the horse didn't have a nail in his shoe, the shoe fell off, and then the horse fell, and then the captain of the cavalry fell, and the whole war got lost because somebody didn't do a nail correctly. It's like it's a good poem. It's made to just make you think about like how important every little thing is, and that's exactly what this is. It's that one nail, one bolt on a car that can't be delivered because someplace in Taiwan is shut down, and it can't easily be replaced because it's a custom piece or something like that this company in Taiwan's been making for 20 years, but the owner just died, they shut down, now they're in bankruptcy, and it's going to take 2 years for somebody else to tool up and be able to do this. So the car can't be made. End of story. You're going to be offline for ages for something like that. And Boeing is like that. Everything's custom on a Boeing. They can't afford to lose a supplier. The suppliers, they spend 18 months designing something just to put in that plane, and they've got patents and everything else on it, so nobody else can do it anyway. So all the, it's all interconnected, and it's all crazy, and you can't let it fall apart. This is what I'm saying about the government, though. You can't let it fall apart, and you can't pick and choose who you're going to help, because that's just the wrong-headed approach to it. That's crazy, though, this Blue Apron. And again, the same thing. You can't ramp up businesses. You can't look at these guys and say suddenly they're worth 86 million. Well, they're not worth anything anyway. They're only $86 million. So it's really a penny stock, effectively. It's gone crazy. But they don't make money. They're not going to make more money. They're not going to have enough more sales to make money. And probably buying things is more expensive for them now, and getting supplies is more expensive for them now. But there's no rationality to what's going on the market. It's crazy. Thanks for pointing that out, Randy. That's super interesting. Does selling puts on a stock like TD make sense here if you want to own the stock for the dividend? No, unfortunately it doesn't, because there's no bottom. I would, unfortunately, Canada, you got to go Canada, banking, oil. We have some TD puts. They're killing us. Oops. I mean, I personally believe that TD is a fantastic buy here. I think this is insane. TD is probably half of Canada's total accounts. I know that they have more than half of all the trading accounts in Canada go through TD. There's pretty much like no one else in the game. So, but look at trading. You say, well, on the other side, you say, well, then trading is a big part of their business, and look at what's happening. How's that going to impact them? This is completely catastrophic. And, you would think this is a bottom. I think it's a bottom, but you've got to be willing to stare down a complete loss, or you've got to be willing, any position you're in. We have an article in the education section on our chat room on Phil Stockworld. We have the education section. There's an article there on scaling in, or in our strategy section, I think it is. And the point is, anything you're buying now, you've got to be willing to double down on twice. When it drops 20% or more, that's the first time you want to consider doubling down. When it drops another 20%, that's when you want to consider doubling down again. If you do that, you're going to come in at an average 20% lower than here, and the stock will be 40% lower than here when you do it. So you're still going to be down 20%, and you'll have a big position. That's the thing, but you have to be comfortable with that position and think about that for the long term. So 20% below 37 is like 30. So basically, if I bought some at 37, if I have $37,000 to allocate, 1,000 shares of TD, then I would buy right now 500 shares at 37, or sell 5 puts. Also makes sense. And if I sell 5 puts, I'm better off because I can sell 5. Oh, they don't have a long option. I can sell 5 October 30 puts for $5. That's a damn sight more than dividends are going to be, right? There's no way they're paying anything like that in dividend. Probably paying about $2 in dividend. So I sell 5 October 30 puts for $5. That's net 35. I'm sorry, it's net 25. So I've already covered the first 20% drop. If it goes to 25, I'm either going to roll the puts or I'm going to accept my first 500 shares of TD. All right, and then I would then probably sell some calls, and let's say the $37 calls are now $7, $6. So if I sell the 25 calls at that time because it dropped, and if I sell them for $6, and I sell the $20 puts for another $5, then I'm going to drop my net from $25. It wouldn't. Yeah, I'm going to drop my net from $25. What I say it was going to be is going to be let's say $10 total that I'm selling. So let's say I drop my net to $15 on my base stock, and then if I'm assigned at 20 for more, my average will be $17.50 on 1,000 shares. So if I want to buy 1,000 shares of TD for $17.50, then I have no reason not to sell the $30 puts for $5, right? May as well take my $5,000. Because what's my risk? My risk is owning them at $17.50 for 1,000 shares. Meanwhile, if that's my commitment level, then I don't feel I'm making a very nice return on 1,000 shares, especially over that period of time. But on the 17,500, I'm willing to commit to owning TD for the long haul. I'm already picking up $5,000 between now and October if it goes the other way. That's fine. That's how you got to play this market with sensible stuff like that. That's what all those puts were we did the last couple of days. They're like generally 40. I was targeting 40% lower than today's prices, and we're still getting burned. Not today's prices, yesterday's prices, and we're still getting burned on them. But we're not getting burned by the movement of the stock. It's not the 6-7% drop in the market today that's hitting us. It's the VIX going to whatever the hell the VIX is now, some incredibly high amount. VIX. 80. That's what's killing us. All the losses we have in our portfolios are caused by this, not by the actual positions. They're not killing us. This is killing us. Well, some of the positions are killing us, but you know, those can be fixed. But the VIX is crazy because all those options we sold are ridiculously high priced, and we sold a lot of options. But it's not a real loss, it's a paper loss. And that's why you've got to take a breath, ride it out, make good decisions. That's what this is all about. Last couple of them, we got to go. Brian says, would you adjust or roll or close any of the short puts in the portfolios that are way out of the money? Yes, I would. So definitely ask me in chat. I'm happy to talk about anything like that because that's important. LB, now on the whole, I'm trying not to right now. I'm mostly trying not to touch anything because I don't want to spend any money. I want to keep the cash on the sidelines. I want to keep, even if the portfolio is down like 75%, I want to keep the positions until we find a bottom. I don't want to start moving things and then have to move them again because there's a certain little friction cost every time you move stuff. And we don't know where the bottom is. So it doesn't make sense to aggressively go after something if we don't have to. LB was holding for a while, but crumbled to pieces in the last 5 days. I will take a look at that because I love LB. Actually, I'm going to be happy to get back into them now, but LB, oh my God. Wow, that was like sudden, huh? Oh, shit. Unbelievable. I mean, you just, if the problem is if somebody, you know, if a big fund or somebody goes, I'm going to get out of my LB position in this market, and they say liquidate LB, you know, some big, you know, some guy with billions of dollars says to one of his associates, his trading guys, and says, liquidate my LB position. The guy's like, blah, 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 you know, and it's $20. I've done that back in the day. I've had things where people said liquidate something, and it's like, you try as best you can, but when you try to liquidate a huge position, that's what happens.
And you end up, so it was 20. Now from the guy's perspective, maybe it was 20 and he ended up averaging 15 on the liquidation. But his liquidation drove it to 10. And now maybe you finally found a buyer. Found me, I'm in. But again, we can't take new positions. We really can't. We got to babysit the positions we have. As much as I would love to jump in right now, it's too scary. And only because we have plenty of positions. It's not like we don't have plenty of positions. So it's like, you know, we have a lot of positions. We still have a lot of cash. The margins are killing us now, and the paper losses from the VIX are killing us now. But when that calms down, we're going to have plenty of spending power to move things. So, you know, I'm at the moment though, batten down the hatches. April 55 puts on BA at $8 now. Is it worth selling as they expire before earnings? You have to realize if they don't bail out the Boeing and bail out the Boeing will get a bailout. And the airline, because Boeing is a huge part of our freaking industrial production. It's like a major component. Boeing is the plus or minus on durable goods. It's like, you know, that's the machinery, durable goods is all Boeing. Our exports are Boeing. You know, one of our biggest export components is Boeing. You can't let Boeing die. You know, and not only that though, but airplanes are obviously strategically important to the country. So they're not going to let Boeing die. But the problem with Boeing, unfortunately, they already had this huge hit from the 737. Now it's the airlines that are supposed to buy the planes from them are going to start going bankrupt, and they're going to cancel all the airplane orders. And then what is Boeing? Now Boeing's a company that makes airplanes that no one can afford. So without incredibly massive bailouts, we have there's no real bottom you can call on this thing. I know it's the most tempting thing in the world, but it's just absolutely crazy. You don't know what's going to happen. So anyway, that being said, see if the markets have calmed down a little bit. So look, see, we came down to that line exactly, huh? So 2262, just right at that line, which is 2265. And these things are good. I mean, it's, you know, again, it's going to work best on the S&P because the S&P is the most normal index. The Russell also a normal index because it's very wide. The NASDAQ has crazy, you know, it's super affected by only a few stocks, so you can't go by the NASDAQ. The Dow is a joke. Oh, that's not the Dow. YM. The Dow is a joke, but it still came up around that line. You know, the more something is traded, the better it's going to obey these lines, is probably a good rule of thumb. So, you know, we were going long at 24. I can't make that call now. The first time you test a line, sure, I could call it for a bounce, made a little bit of money on the bounce. The second time I lost a little bit of money over here. I like copper long. Natural gas we picked up long today, except it came back even lower. But I think I'm still long on natural gas, probably with a loss right now at the moment. And copper, we picked up long also, and it's right back. Actually, it's right back to where it was before. So I like copper long here at 215. I like not 250, yeah, 215. I like natural gas at 162.5 or 0.7, and I mean, we have USO for July because I think by July we're going to be back in the 40s or 50s, but I wouldn't play it short. Gasoline though here at 65, sure, I like gasoline at 65. This is getting silly. You know, realistically, you know, obviously if a barrel of oil is 20 bucks and there's 40 gallons in a barrel, 42 gallons in a barrel, then oil is 50 cents. Then in theory, gasoline can be made for around 50 cents, right? But that doesn't mean that you're going to sell it for 50 cents. There's still a cost of refining and so on and so forth. And will oil stay at 20? No, it will not. This is stupid. So I'm too scared to play the oil futures, but I do endorse picking up some gasoline. In fact, let's just add a couple here. We can. Active. So we can watch it for next week. Because this is so low that it's like silly not to get some. Yep, can't fill it. Where are you? Oh. There it goes. All right, I'm going to keep the other one low in case it fills. So we got 65. Oh, yes, that's crazy. All right, so hopefully we can fill another one below the line and average about 65. 65 cents. Oh, that's so silly. All right. Let's end the webinar on that happy note. Buying gasoline for 65 cents a gallon. I mean, it makes sense to buy a contract here because if it goes down 65 cents, here. So 65 times 420, $27,000. If it goes to zero, it's $27,300 that you can lose. If it goes up $1, that would be that would be 100 pennies times $420 a penny, 42,000. So the most you can lose if gasoline goes to zero, you have to roll it, of course, but you know, the most you're going to lose if gasoline goes to zero is $27,000. You can gain, if it goes back to $1.62, $1.65, you can gain $42,000. Now, it's highly unlikely it goes to zero. Assuming somebody somewhere buys gasoline, it's not going to be zero. If it goes to 20 cents or 30 cents, you'll lose $10,000, $15,000, but you'll be paying nothing at the pump. It'll make up for it. So that's your trade-off. So but your hedge on the other hand is that if gasoline goes back up, all the gas you buy for your family for the next 10 years is going to be paid for. And if gasoline stays down, the money you save over 10 years will be more than you lose on this trade. So that's my logic on that trade. Just with one contract, $42,000 if gasoline goes back up. So if gasoline does go up and you're paying $4 at the pump sometime, you'll be like, oh my God, I made so much money on that gasoline trade. Now, you don't have to buy this contract. We were looking at the RB F22, and that one's at 91 cents, or it was last traded at 91 cents. It looks like it's 90 cents now. So you can take this one, that's the January 2022 contract. It's quite a bit higher, of course. It doesn't come down like the other one, but that'll make good money also. Same thing. So I don't mind, I don't mind rolling because you can make sudden incredible money just on the RBs. So we'll play the gasoline for now. This is already the April gasoline anyway, so this contract's good for like 25, 30 days. So we'll play this one and see how it goes. And if we don't, and if it doesn't work out, you just roll and get the next contract. That's all. Because the front month, the friction between the two contracts is very small. See, it's April. So it could go, well, look at it already. It went up 3 cents. That's $1,200 since the bottom over here. But on the other hand, I was I started liking it at 65. So it's right where I liked it. That's where we are at the moment. So that's that. Oh my God. Okay, well, that was way too long. Trading in LB just halted. Any idea why? Yeah, no, I got no idea. I have to look for the news in chat. But anyway, all right. Well, anyway, guys. So sorry I didn't have better stuff to talk. Sorry I didn't have happier things to talk about. But this is a crazy, crazy time in the market, and we're just gonna have to muddle through as best we can. But please talk in the chat room. Let's talk about this stuff, and let's if you have hedging problems, if you have issues, let me know. I know most people are pretty well hedged because we've been so bearish and so cautious with the market, but let me know. All right. Thanks. All right. Have a good day, everybody.